The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Sounding bad. Feeling good, but sounding bad. Got a tiny bit of a scratchy throat, but I'm going to make it through the day, folks. This is a big day coming up here because there's trouble in River City. There is a market that is in deep trouble. I've posted the DAX and I've posted the FTSE for you folks to look at it. But frankly, that's not the market that you need to be watching, folks. You need to be watching the bond market because the bond market is hanging on by a thread, and I literally mean by a thread, and it's a very thin thread. If you'll remember, I posted this last week when we were making the low on Thursday, and you'll see here that we've gone nowhere for 4 days, and Friday, Monday, Tuesday, we're really gone nowhere. And if we start going below 137 in this TLT, this is going to be a very, very bad sign. And I'm afraid that might happen, but, maybe it won't. I'm just warning you to be careful because that's not going to be good for money because money is related to that interest rate market, and that's it. The problem lies here, in my opinion, that we've talked about a few times before, but it's good to bring it up again. Here's where we are here in the high-yield junk bonds. That's the one that's in the candlestick. The one on the graph on the blue is the 30-year Treasury, and you can see here this 30-year Treasury has been dropping. We've held the 61% retracement on the long-term weekly at 156 and change, which is very good. We're trading about 158 today, so we still could make it. There's a really good chance we got a rally today, but then the Fed could come in and do whatever they want. But this is a very negative chart, folks. It could change at any moment, but this has been bearish for a very long time. In these Treasury bonds, they've tried to talk to us about what do they call that thing, negative interest rates, and that certainly doesn't look like it's coming right now. But the yield on this 30-year bond is still under 2.5%, and for years we were always expecting 4 or 5% interest from the government. So if the dollar starts to strengthen, which it's doing a little bit today, it's got a chance here for these things to hold. So that's the main thing to pay very close attention to. We had a question from one of our listeners that does the newsletter from 24/7, and we talked about selling the Australian dollar. And I'll bring this up to let you see what we're looking at here. We had that move up there at 80, and then we backed down. We rallied up and to that 78 level, which was strong resistance. If that's correct and it starts to go lower, we're looking at a market that's most probably going to go down to the 75 level, without too much trouble. But the ones to watch today are the Treasury bonds, and boys and girls, there's one other that Santa is jingling his little bells today. This may be today or it may be tomorrow, but the day is coming. We have been waiting for gold to buy the gold. It might be today, it might be tomorrow, but it's going to be soon. We know that the what do they call that, GDX that we talked about, the Gold Miners Index, it's going to hit those numbers this morning. So pay attention to those numbers at 30.54 in the GDX. And so if we hold that level and it starts to rally, get in there and buy the GLD, strap on your seatbelt, and let it rip, because this might be a big one. We've been waiting for, I don't know how many long. I get so many emails about this stuff that I think I'd be happy to just get it out of the way, whether it's going to be good or not. But we're getting better. I'd love to see a quote under 1,700. That would be one where all the boys will come in and start to ring the bells. And, of course, the 382 on that number, 382 on that is 1673. We've talked about that on this show 3 or 4 times in here, but you'll see it again here in just a second, so we can get it up here to let you folks take a look at it. There it is at 1673. So that's the number. We're trading around 1709 right now, so we're within about $30 of the number, and hit it exact would really be an ideal situation, but Maybe not. I don't know. Silver's looking good. Platinum's looking good. And I wouldn't I wouldn't short platinum with Tom O'Brien's money. It really looks very, very positive. I focused on a video last night showing the increase in how the platinum is holding up extremely well, and that's another good thing. The other one is that must hold up today if you're really bullish. The copper has to hold above 410, folks, because we had a 50% rally yesterday up to 422, and it really gave it all back. It was trading around 411 or something earlier this morning, so it's really very important that it holds that 406, 405 level in copper. And then that would be one that would be, really important to take a, long position if it can hold that. That's the key. But the one to watch today, folks, is the gold and the bonds, and those are the ones that seem to have the best bang for the bucks, as I say, with the best probability that you're looking at. So that's the main thing. If you look at this chart here that I want to show you here, this is one from this is crude oil from our good friend across the pond over here who uses the Andrews pitchforks along with the ABCD patterns. And you can see here that we broke through the median line yesterday in the crude oil, and that gives us a target possibly of 52.50. If we can get it below the 58 cent level, then we would have a pretty good chance of looking at 52.50, which is the 382 retracement on that whole move. So that's a pretty substantial move. But the key level to watch on this is we get it below 59. If we get it below 59.10, that means it's breaking the lower boundary of that Andrews channel line, and that is in itself is kind of bearish. So those are a few of the things that we're watching here today. So we'll find out whether it's going to mean anything or not. But the early morning rally last night with the stock market was based on China and Hong Kong. The Chinese Hong Kong markets are going crazy with IPOs and tech stocks. I mean, they're just it's reminiscent of the dot-com bubble over there. But that affects us when the market opens. The traders get scared, and the market rallied, 280 points in the Dow, and now it came back and gave it all back. So whether that's an indication of anything, I'm not entirely sure, but we'll have some more information if we go below 31,200 in the Nasdaq and the Dow Jones, and if we go below 3850 in the S&P, that would be a relative negative on a shorter term basis, just looking at the 4-hour chart. So I think the key things to watch today are the bonds and the gold. The gold has got the number one thing. It's either today or tomorrow, folks. That's that's my opinion. They don't always do that, but we have an absolute perfect setup below 1700. If you get the 24/7, make sure you check that chart, because I sent a video out on that, and it's got everything that you could possibly need. So watch it very, very closely. The risk is going to be small, and the profit potential could be substantial if it's going to work. And remember, they don't always work. That's the main thing. You can be right 51% of the time and still do really well if you keep your losses close and let the profits, go to where they should go and not watch the screen. 877-927-6648.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We have as our guest today Shane Smillian, wolftrader.com. How are you doing, young man?
Good morning. Is this Duke and Duke?
This is the place. This is the place. It's the infirmary of the Duke and Duke office, but we're okay. Listen, we have a question from one of our listeners out of Florida, and that is, how do you know that the Federal Reserve is in there buying this stuff like you talk about? What are they buying, and why are they doing it? Okay, so what I'm tracking, I track a combination of multiple what I call Fed internals. I track and monitor the Fed activity throughout the day. So it's really a composite of multiple activities. Now, what happens is when I get to certain thresholds on these internals, when the activity increases, the market tends to rise. Now, I have my theories about how that happens, but the only thing that I can do is track the data coming across my screen, and then I put it into the market, and I'm able to track the internals. I'm actually able to track what I call the Fed juice, which is a indicator which correlates with price, and I'm going to get into that all today. But the Fed right now is in an all-out war with the bears. What they did on March the 1st, it was they dropped a nuke on the bears, and I'm going to get into that. But what you saw was something that we've never seen before. It was an all-time high intraday, and when I saw that, I'm thinking to myself, they have the grit and the determination to see this market higher, and I really question any shorts at this point, because you're seeing these schizophrenic moves, because you have the natural forces which are trying to point down, and then you have this external force coming in literally intraday, causing these markets to do these wild U-turns. And I'm going to show you some graphics just to show you what I'm tracking. But really, you got to put all of these Fed operations together to get what I call the Fed juice. But somehow, some way, this is making it into the markets, and I have my theories about how that's happening, but all I can do is track the data that comes across my screen. So, but I feel like I do a pretty good job at that, and I'm able to translate that into what's going on with the market. Well, that makes very good sense, but I don't want to throw cold water on this, but these boys over there at the Fed are pretty smart. Why don't they hide their transactions through foreign entities and stuff like that, so you can't see what they're doing?
Well, Larry, okay, that's a good question. So those would be off the book transactions, like the plunge protection team, which theoretically was created in 1987. I can't see any of that stuff. So maybe they are behind this. It's very possible and likely they are doing things behind the scenes that are off the books that I can't see. All I can do is track what I can see. I scour through this data every single day. I'm plotting it. I collect it, and then I put it into these signals to come up with what I call the Fed juice. And so this is really what sets Wolf Trader apart from other services, because since 2008, everything changed. So we really had the Fed as a passive entity before 2007, 2008. I mean, really the function was more or less setting interest rates and the Fed funds rate and the overnight lending. I mean, sure, they did some bond purchases and repos, but not to the level that we see now. We're seeing things that are just so far crazy beyond the imagination that what you're seeing in these markets day to day, these wild U-turns, that's the Fed. That's not. I mean, there were buyers coming in like on March the 1st. They were coming in overnight. Now, whether the Fed was doing overnight, I can't see that. But I do know that once the markets opened, they dropped a nuke on the bears on March the 1st, like nothing we've ever seen before. So I'll get into that, and hopefully I answer some of these questions more as we go in the slides. And to be honest with you, I've had to continuously update this Fed juice to keep track with the pace of what's going on, because it's so crazy right now what's happening. It's so over the top. It's beyond COVID now at this point, what they're doing. And I'll get to that in a slide.
You've actually scared me a little bit, Bubba, but please continue.
Okay, so this is the Fear and Greed Index. So we'll start with this now. Things are so scrambled right now and it's a schizophrenic market on a day-to-day basis. And you'll see the market tries to fall. Like, for example, I have these easy timers that I've come out with now. They're intraday timers. There's a bear market in the S&P in the morning. So, for example, right now, the easy timer actually went short this morning at 8:15. It goes short, but that will disappear. Like once the market opens and the Fed comes in, that will disappear, because these are the natural forces trying to push the market down. And we'll get to that. But the fear and greed right now is 62. I don't really know that this even matters at this point because of the level of craziness that we're seeing. But I will put it up here. It's a little bit on the greedy side. But again, we see the natural forces trying to take this market down, and then the U-turn comes immediately correlating with what the Fed is doing. Now, the fear and greed, I think, in a market that's not tampered with, okay, or not intervened, or whatever you want to call it, central banks, this kind of stuff makes more sense. I mean, you get these over extreme sentiments, and to some degree, they still do play out. This was before COVID into here. We had this big extreme up into here, and then it goes down here at the lows, and the Fed really comes in here with the QE4. So now we're just kind of wandering around here, and at some point it does mean something. I mean, even with the Fed, the market does have mini backoffs, but they're far and few between. So we'll get to that. But this is the easy timer model. So this was gold today. So for those of you who don't know what the easy timer is, this is a new trading system, and I call it Groundhog's Day. That's why you see the groundhog there, because the market has these habitual patterns that it goes through in the morning. So what I do, I look at each day of the week separately. So Monday is different than Tuesday, is different than Wednesday, is different than Thursday, is different than Friday. And then I know that the market tries to do these patterns in the morning. So gold this morning has this short in the morning, and it hits, it has a good day today. I mean, when the markets get really active, these easy timers tend to do better. So it goes short, and then the long stops out here. You can see the long had a stop out here. And so that's gold. And so I call this Groundhog's Day because it's the same concepts over and over and over again. Now on the S&P, like I said, in the morning, there's a bear market in the S&P before the Fed comes in. So what we do is we try to focus and capitalize on this, to focus on that little window of time. And today it's from 8:15 to 10:15 is the short window today. So that's the window that we would expect the S&P to go down, and then the Fed comes in. Now, usually the Fed has been ramping up, and I talked about the concept of the Skynap, but this is the slide that I make here Dr. Strangelove, because in my mind, we are at these type of crazy levels here. We're seeing things that we've never seen before. And they literally dropped a nuke, what I call a nuke, on the bears in terms of what they're doing with the juice. And this happened intraday. What you saw was the equivalent of a gap. Like when you see a market gap and the market's trading at one price at the close and then it opens at a different price, you saw the equivalent of that, but intraday, okay? Because what happened is the price readjusts after the Fed comes in. So I have a little slide here of the little purple one at the top showing the Fed juice, and we'll get into that. But it's at levels of crazy that even I can't believe.
Well, thank you, folks. We'll be right back with more of Shane Smolian, folks.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back talking with Shane Smolian, wolftrader.com. Would you like to continue, young man?
Sure,
we have a question here from one of the gentlemen from New Jersey, and he's asking, how much of an influence do lunar cycles affect your work?
Oh, I think they're very good. I think looking at the full moon and the new moon are good. I can pull up some of those lunar cycles off the charts. Different markets do different things on full and new moons, but when the markets get emotional, they tend to be good turning points. The orb is about a day on the moon stuff, so it's pretty, it's tight because it's a faster moving transit. So I can talk about that in a minute, but let me just show you what the equivalent of an intraday gap is here. The market, this is the 3-1. The market was already heading up, and then this is when they come in with this record print. This is an all-time record, and I'm going to show you the relation between this and COVID. But you're dealing with craziness. I mean, you're dealing with stuff that's beyond the control of, it's just a schizophrenic market intraday. I think long term, I think this thing's going to go up. We've got late March, we've got some really, really positive transits this month. I think it's likely going to go up and press higher from here. I really question shorting anything at this point on the S&P, even on the short term. I mean, I have that easy timer, but that's like 2 hours. Like, that's it. I mean, other than that, I think you're dealing with this. So the market is rebounding because of the all-time record of the Fed juice. And I've been trying to keep up with this. I have the internals now, which I actually track the direct internals, which I'll get to. But of course, you have the stimulus. And don't forget, guys, the stimulus checks are coming. So people are going to be throwing that money back into the market. So it's not just like an event that's going to, sell the news type of a thing. You've got the Fed doing this. Then you've got the little guy's going to come in and throw their checks in. And these checks are bigger. Then you got fear of missing out. I don't think that this is going to go away anytime soon. I just don't. And I think the Fed is determined to push this higher. Now, this is a graph of small-time retailers. I've showed this before. But, in a regular market, it would mean something, right? So, like, if you go back to 2000, when it gets to these highs, it's a high. When you get to 2007, it's a lower peak, but it's a high. Now you have these wild, crazy numbers here, and that's simply because there's more money being printed to throw into the market, and the more checks are coming. And so we know that these Robinhood traders, that the retail industry is exploding. If you go on Thinkorswim, sometimes the wait is 4 hours now on the chat to talk to somebody. Larry, I've never seen that. I know we're in COVID, but they're overwhelmed because the popularity of the trading right now. The QE, what's the Fed up to? Well, they've got this QE going on still with the purchase. So we got the bond purchases going on. That's part of the juice, of course, the balance sheet expanding. But they shut down these emergency lending programs, so they've stepped up what's going on behind the scenes. And like I said, we had that all-time record print on March the 1st. And this is create levels of crazy now that I've never seen this. I mean, it's just, and I don't see it stopping, Larry. I don't see it stopping, and I don't see the markets, it's not really resisting the Fed. This is what I call the Skynet. This is what they changed since late November. If you get into, late October, if you get into here, this was the last slide I showed you on the show. Now I'm going to show you what just happened between the last time I was on the show and now. They are determined to keep this market up. And I really think that,
excuse me,
go ahead.
We got a question from Mr. Z. He's asking about the fact that the Treasury is going to reduce it by to $800. Is there a possibility of that in June? That's what he's asking.
You mean, are they going to reduce their holdings?
No, reduce the amount of money that they're going to be giving the folks. Is any truth to that?
Are you talking about stimulus checks? Or?
Yeah.
Oh, I don't know.
I think that's what. Hey, Mr. Z, why don't you call in and ask the question, buddy? I think I screwed it up, but please continue. I'm sorry for interrupting, Shane. Go ahead.
I think and then there are some worries. I know that a lot of people are worried about. Look, the economy is not in as good of shape as the GDP says. The labor market's struggling. I think the Fed knows this. There are probably foreclosures coming. I know people are talking about that, but again, I just think they're going to keep coming out with more programs, HARP 2.0, HARP 3.0, whatever. I mean, CARES Act 2.0. It's just, look, I don't see this. If I see these acts coming out and I see the market resisting, that's one thing, okay? But I don't see the market resisting yet. I saw it resisting a little bit. And so anyway, so I had to develop these new Fed juice. I'm going to talk about this. This is the Fed juice 4.0 and the Skynet, which we'll get to. But this is a graph of what has happened just since the last time we talked, Larry. And so you can see what they did when they dropped the nuke here, that we're dealing with just all-time hot intraday. This was an intraday action that they did. I mean, but we're still higher than we were during COVID now. So if I put another graph up here, You know, they're now surpassed COVID. So this is the purple box here. This is what I call the Skynet. And so what's happening is the S&P has become the craziest market to deal with on an intraday basis. It's just the swings are just incredible. And this is because of what the Fed is doing. I mean, this was like I said, this little green box over here, this is during COVID. And now this is what's going on now since late October. So this is a whole new ball game in terms of the Fed use, because I really didn't need to change this thing in 10 years since 2008. And now I've had to change it. So I'm able to track what I call the Fed use internals now. These are levels of speed of the Fed use, right? So the original Fed use here was the 3.0, now, and I have the 4.0, and I also have what I call the Fed use internals. So I directly am looking at the playbook of what they're doing. Now, usually there's a little bit of a lag on this, but this time, like the Fed use internals went into a buy on Friday, okay? And usually there's like a 2 or a 3 day lag downstream. There was no lag this time because they followed it up Monday with just an incredible burst, like I said. And so you're seeing that the speed of this is at such a level that I just don't, Larry, I can't see it going down. I can't, they're not going to stop. They are not going to stop. They're determined to keep this market higher. Now, this is a weekly time frame here. So this is the Fed use here. This is on a weekly time frame. You can see this little pop up here recently. This is the recent activity that I'm talking about. Now, this is a weekly scale dealing with, longer term maturities, things like that. But still, you can see even these are starting to increase. And until I see the market start to resist this, Larry, if I saw the market start to fall, okay, and I saw the Fed continuing to pump, then I would say, hey, this market's in trouble. But I don't see that. I don't see anything close to that. I see a market responding to what the Fed is doing. So as long as I see that on the weekly time frame, this weekly time frame is still very bullish. And so I really will need to see the Fed fail at some point for me to say, hey, the market's in trouble long term. We see nothing like that. We just see a market that it may have these periods where it falls off for a few weeks or whatever, but something to get a big sell-off like we saw, we would need an event like COVID, like we saw back into here. And I just don't see it. I mean, I don't think the Fed is at peak power. I mean, people are talking all the time that at some point the Fed's going to fail and all this stuff. I don't see it. I mean, I still think they could do more, particularly in the bond market. I'll show you a picture of the bond market here. We'll talk about this when I get back.
Yeah.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direxion's daily S&P 500 bull and bear leveraged ETFs. Direxion leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit DirexionInvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're talking with Shane Smulyan, wolftrader.com. Would you like to continue, please?
Sure. So I have the 10-year bond here, and I just want to point something out to people that, during COVID, the Fed was purchasing up to $90 billion a day. 90 billion a day. They're currently purchasing about $5 billion a day now. So I want people to understand this is the biggest player in the bond market. You're not talking about just a random person. They're the biggest player. So if they want to stop this, they can. I just think that they don't want to look like they're panicking. Okay, so I think they're coming up with a plan here. So we're nowhere near maximum level. Like if I saw $90 billion a day purchases and the bond is still falling, then I would say, wow, this bond market's in trouble. But I know that they're thinking of something and they can't let this fall. Okay, and again, they're the biggest player. The bond actually just hit a breakaway level here. You can see this here. It actually just hit some type of a breakaway level. The Fed use is in a buy right now on this. So it is tracking. The Fed use is tracking the bond very well here, and it just went into a buy. So I would say the bond could be at some type of a potential low here. It's at that hit 3% on the RSI. There's a lot of things here that make me think that the bond could be trying to come off these lows here. We will see. But again, if they really, really want to, they'll stop it from going down. I mean, that's my opinion. Of course, it could be wrong. But based upon everything that I've seen in the past, if they want to come in and do it, I haven't seen the market resist them yet. Okay, so now this is getting back to the S&P here. So what I want to show you is these blue arrows. These are the Fed internals. So the blue arrows represent the Fed internals, which I talked about. So there was a sell here on January 15th, a buy, and then notice the Fed internals go into a sell. It wanders around for a couple days, then it drops. The internals go into a buy. It wanders around for a couple days, then it goes up. Then on 2/8, the internals go into a sell. This was the day after the Super Bowl, and then immediately you see everything just flattens out. Takes a few days, kind of drifts around, goes down. Then Friday, the internals go into a buy. Now normally we see a couple of days of wandering around, but this time we didn't. This time on March the 1st, we saw a huge spike up. Because they set a record that day. So what we're seeing is the rate and the speed of the way that they're acting is increasing. So the Fed use 4.0, the green one is the second fastest, and you'll notice that the internals feed into the green one. So right when the internals go into a buy, usually within a day or two, the 4.0 goes into a buy. See this here, how they follow? One follows the other. So that's what we see now. So both of these are in a buy. And I just see, this market, it's going to be real tough for it to go down. I mean, just in my opinion, that's just what I see right now. So it's just something to watch. Now, I also watch the dollar juice. This is tracking the S&P in terms of the relative strength of the S&P versus the dollar. This is also in a buy. It's hard for me to be anything but bullish at this point, particularly since the S&P held up against so much negativity in the last, few weeks. It just held up, and I think it's likely going to be headed higher from here. That's my feeling. If we do get drops, you can pretty much be assured that they're going to come in. Now, gold is. I'm going to switch to gold here for a second. Gold has been showing a lot of weakness here. The gold passed these seasonals that had a positive seasonal peak in late March. So the positive seasonals come in somewhere right around here. I'm going to draw it with the arrow here so you can see it. So whenever you have a declining market into a seasonal peak, that's not a good sign. That's projecting some type of a negative divergence on these markets. So I think gold is in trouble. I know that you had a target of 1,700, Larry. How do you feel about that still?
I still think it's going to 1698 to 1673, I think. But, I'm wrong a lot, so I'm waiting.
Okay. Yeah, I mean, to me, it's basically there now. So I think your call was excellent. I know you called that weeks ahead of time. But I think, I think it's definitely going to that level. I think the way that this looks now, I mean, this could go a lot lower, in my opinion. I mean, if it doesn't hold that 1,700 level, it could go a lot lower. This is another chart here. This is the dollar juice.
Shane, we got a question from one of the listeners in New Jersey again, different person, and that is, how do you know that these people are going to take these stimulus checks and put them into the market? Some people are just barely hanging on by their fingernails. They're not going to be able to.
Yeah, this is true. Like there was record retail spending too. So people are spending money. Some of them are saving it. But when we look at these numbers here, when we see the number of retail traders here into the market, we know that they are putting their money in the market. Like we can track this. And I think if you put more cash in just these people's hands, the ones that I show on the slide here, there's going to be more money coming into that market. So it's going to be like a triple stimulus, or you're going to have the Fed, you're going to have the stimulus, you're going to have the PPP. There's a lot of positivity coming down the line, and then the dollar gets weak on that, and then that also pushes the markets up too, with general inflation. Now, the only markets that really are flagging right now are gold and natural gas, copper, oil. These, as you know, these are going higher, and what it does is it just distorts the patterns. I mean, it makes a rally into a super rally, and it just makes it harder to track because you have external things coming into the market. This is the dollar juice here. So you can see this is the history of the dollar juice. The dollar juice has been very good at tracking these moves on gold, going all the way back here to December. These arrows, you can see these are the actual arrows that I put out to the subs. And you can see here that this has just been a beautiful at tracking the path of gold here. And gold is a market that doesn't like to go straight down. It kind of waves around. So we're getting a buy on this. We could get some type of a short-term relief here on gold. It's getting in a buy on the dollar juice. It's also in a buy on, like I said, on the Fed juice. So maybe it tries to bounce around a little bit. It's very turbulent at these levels. It's just kind of bouncing around at that 1,700. I think it's going to be really interesting to see how it responds to that 1,700 level, because if it doesn't hold that level, I think gold could go a lot lower. Now I'm going to show you one more chart here. This is an optimized Bradley barometer. So people know about the Bradley, of course, but this is an optimized Bradley. Take it with a grain of salt. It's plus or minus a few days. I like this though to show the basic trends, and this is showing a trend of the dollar trying to head higher through the end of March and then another peak into May. So if this is true and the dollar does peak into May, then gold could be trying to make a low sometime around May, because gold usually runs opposite of the dollar. Normally, I would look at this and say, this is a pretty good inverse of the S&P, but we know that the S&P has all kinds of other stuff going on with the Fed. So just wanted to point that out. So any questions?
Boy, this is really good information. I'll tell you, I wish I had more time to ask the questions and smart enough to ask some of them. But you really do a superb job of diagnosing what you're looking at. So the only question that the guy from New Jersey had, I have to agree with him, because I just don't think there's enough money out there. Well, there's a lot. You're talking millions of people, so you only need 4 or 5 million people to do this. It's not a big deal, is it? To get 4 or 5, because.
And these players are already, they're already in the market.
Okay, we'll be right back, folks.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back with Shane Smolian, wolftrader.com. Shane, we have one question from another listener in Florida, and that is, where do you get the data for the Federal Reserve data that you talk about? Where is it published?
So all of this there's different branches of the Federal Reserve. The New York branch is the largest one. This is all publicly disclosed information, but the key is putting all of this together to understand how it influences the market. So it's really a tough job to get all this data and put it together and then correlate it to what is happening in the market. That's the key here. So this is all public information. Again, there's information out there that I can't see. During 2008, they did all types of off the book stuff with foreign countries that we found out later. But again, not that I think that's bad or anything. I'm just saying there are things that I can't see. But in terms of the big picture, I just think that there's so much positivity out there with the Fed, with the stimulus, that it's likely going to be very bullish.
Okay. That makes good sense to me.
Sure. And so if people want to reach me, you can head over to my website, wolftraderfutures.com. And we have a variety of different newsletters. We have S&P, which is the most popular one. We have the metals, energy, currencies, cryptocurrencies, and then we have a larger package, which is the platinum, which we have the trading services on. But if you want to go over there, sign up. There's a free email list. You can go down on the website. I'm scrolling down here. You can sign up here, sign up on the email list. Get in touch with me here, and then there's a box there where you can actually put your email in to get on the free email list, and that will help you get started. And then that way, I can send you updates of what's going on, and hopefully, if you have any questions, you can send me an email or a chat, and I'll try to get back with you. It's been really, really busy lately, but I do my best to return every single email that people send to me. So. Well, that's how you would find it.
Nice of you to be our guest. We'll have you on again in a few weeks. Thank you, Shane.
Thank you, Larry.
Be back.
Thanks, everybody. Have a great day.
Tomorrow, folks. Stan Harley tomorrow.